Welcome to Trading Nation. I'm Eric Chemi, and joining me by phone is renowned technical analyst Louise Yamada of Louise Yamada Technical Research Advisors. Louise, let's bring you in here after a wild 2016. What do you see on tap for 2017?
Well, it looks pretty constructive. What interestingly started out looking like a distribution pattern, and at least in the Russell 2000, we did see down 26%. So it suffered a bear market. The Dow and the S&P were only in corrective territory at 14–15%. But the quick reversal that we saw with the election has made a really impressive breakout. And I think given that breakout, one could consider this 2 to 3 year consolidation what we call a continuation pattern. In other words, having broken out through this pattern on good statistics and the indicators have turned considerably positive, that we're initiating another leg up in this aging bull market.
When you go back to the beginning of the year, we had that big move down Jan and Feb, and now we've come all the way back. Do you think people saw that coming? Would your charts have suggested that that move was in play? I'm just trying to get a sense for how volatile, how unpredictable are these markets right now?
Well, clearly we had been cautious. There's no question about it. We acknowledge that. And you did have a dip right toward the end of the year, just into the election, and then boom, it just reversed. So somebody was happy with the results ultimately, and things have moved up considerably. And I think, you know, it was difficult, would have been a little difficult to call that turn simply because the technical indicators were not that positive at the time.
And you talk in one of your recent notes, a cyclical bear within an ongoing bull market. Explain what that means. You've got bear and bull in the same phrase there.
Right. Well, when something continues in a long-term trend, like from 82 to 2000 or from 2009 to today, that's a structural bull. We think it's a structural bull. We identified it as such when it broke out in 2013. But within that progression, you can have cyclical or shorter-term bear market corrections. And that's what happened here with the Russell. This has been an interesting period. It's a little bit like 1994-95, where the small and mid-cap stocks, the Russell 2000, the S&P 400 and 600, suffered bear markets declines of 20% or more, but the major indexes, the Dow and the S&P and NASDAQ, did not. They were just corrective trends. And then in 1995, the lift occurred and everything went up. And I think that we're seeing something similar. And the fact that the consolidation, at least for the Russell, has been about 3 years and 2.5 for the Dow and the S&P, it's very impressive.
So if you look going forward to the end of 2017, what's the most likely outcome? Are we most likely higher, most likely lower? What are your charts telling you?
Well, I think that the trend here is to move higher. When and where we get some kind of interim pause, and I wouldn't be surprised to see a little bit more here because you've had such an accelerated advance. We need a little bit of time to digest the gains, I think, but I would suggest that use any weakness here as an opportunity to, you know, nibble into weakness. But we have a target. Well, the Russell measures from the width of the consolidation. The continuation pattern could get to about 1550. We've got 2400 on the S&P, and probably 20,500 on the Dow, just as initial targets.
Well, Louise, thank you so much for joining us here on Trading Nation.
My pleasure.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.